This morning we got the EIA number, came out at 6.3 million build on the WTI. The market anticipated a build, but it was a little bit bigger than anticipation. Follow that with last week's 6.5 build, and really over the last month we've seen a big increase in inventories when you look at the WTI. So therefore we're seeing again that theme playing forward. But in some of the other numbers, we did see a decent draw in gasoline inventories as well as distillates, and with that we actually saw oil bounce after this number. WTI up about 2% after yesterday's 4% sell-off. So we're seeing again the market gyrating around here as we see this critical level now, what I believe is 66. When you look at the technical levels, $66 right there in that WTI seems like be pretty decent support. A lot of technicians have been watching that number. Plus from a psychological level, that's another significance, I think, and that's why we're seeing possibly a bounce here as we continue to digest these numbers, where we saw the WTI actually get into the 67 handle midday. Around 67, 68 was the high, and I had 67.90 as resistance, so just below that short-term resistance level. Now, as you look through the next couple of days, the volatility in the markets, you would expect that to persist. We're seeing significant volatility in the equity markets and as well as some of the other markets. So again, you see volatility really engaging here across multiple asset classes, and I expect that to persist when you look at what's going on with WTI. Again, we have some geopolitical concerns the market's contending with, as well as the deadline, November 4th now. We're a week and a half away from that deadline kicking in, and the market is still trying to figure out exactly how that supply disruption coming out of Iran is going to be made up for in other areas, particularly when we look at the WTI as well as the Brent contract overseas.